Bookkeeping records are kept by the bookkeeper to prepare both financial accounts or financial statements and management accounts. Financial accounts are prepared in accordance with legislation, and they usually have a particular format or a standard layout. Whereas management accounts, on the other hand, can have whatever layout that the company decides and contain as much or as little detail as the company actually need. Management accounts would also aid in the day-to-day decisions of the business. In addition to management, there are a number of other people that are also interested in your business financial information. Suppliers are interested if you're requesting credit, because they need to ensure that you're actually going to be able to make payment, and they will do a credit check on you. Banks are also interested in your financial statements, and especially if you're going to get a loan or if you're looking for an overdraft facility. Investors will be interested in your financial statements, and they'll also be interested in your management accounts because they want to make sure that you are actually investable. And the tax authorities are going to be interested in both of your financial statements and your bookkeeping and accounting records, because they want to make sure that any expenses that you've put in do not relate to personal expenses of the owner, but only relate to the company and have been treated in the correct manner. In the next lesson, we're going to look at cash and credit transactions.